When you look at the financials of AMC Entertainment over the last 4 years, the image is not pretty.
Not pretty is putting it mildly.
We're talking about a brutal, slippery path of a downward spiral. The stock has plunged 99.7% since it notched its all-time high 4 years ago. And yet, there is this serious, credible argument being made by analysts right now that AMC is about to start, and I'm quoting here, raining buckets of revenue.
It feels like a total paradox. I mean, we are diving into a company that has been the poster child for the whole meme stock phenomenon.
Right.
A stock that has, essentially gone from this high-flying narrative to trading as a penny stock. And the solution they've landed on is something so utterly mundane, it sounds like a joke.
The AMC popcorn pass.
A popcorn pass.
Exactly. So our mission today is to go way beyond that surface-level discount. We need to figure out why this strategy offering half-price popcorn for a year is being called a smart business move and not just another desperate attempt.
Especially from a company known for, well, for spectacular financial misfires.
Right.
And to do that, we have to treat this simple $30 annual fee as a really sophisticated piece of financial engineering.
Right.
We're going to dissect the underlying concession economics, the history of failed promotional schemes, and I think most importantly, the behavioral psychology at play when you stack these kinds of loyalty and commitment mechanisms.
We're looking for the economic brilliance hiding inside a massive tub of hot buttered corn.
That's it.
Okay, let's unpack that history first, because that 99.7% overall decline paints a very clear picture of just how far off base they've been.
Yeah, before we celebrate this new thing, we have to acknowledge the context.
Which is a stunning series of attempts to diversify away from their core business.
Sure.
And, well, none of them paid off.
The list of failed ventures since the pandemic and the meme stock surge it's just staggering. And our sources have meticulously tracked how much value the stock surrendered since each announcement.
So give us the highlights of the lowlights. Let's talk less about the percentages and maybe more about the bizarre strategies themselves.
Certainly. We can start in the fall of 2021. This is when AMC, totally caught up in the crypto craze, announced it would let moviegoers pay for tickets with crypto.
I remember that. It was going to be the future of payments.
The decentralized future, exactly. Since that pivot, the shares have been virtually wiped out. The attempt to be an innovator in payment processing was a total distraction.
And if that wasn't distracting enough,
Yeah.
they then tried to embrace tangible assets, which this one still baffles me.
The gold mine.
The gold mine. In the spring of 2022, they decided to acquire a small stake in a gold mining company.
Right. The stated goal was, and this was their phrase, to be shiny and malleable.
What does that even mean for a movie theater?
I think it means they were desperate. They were looking for alternative revenue streams, and it was maybe the clearest signal of that desperation, a movie theater chain suddenly believing it should be in resource extraction.
And then came the move that I think many shareholders still talk about, the APE stock. This was the moment they truly leaned into the meme stock identity.
That's right. Summer of 2022, they engaged in this really complex maneuver involving the APE AMC preferred equity shares.
The goal being to raise cash without formal approval.
Exactly. To raise capital without getting traditional shareholder approval for massive stock dilution. This was packaged partly around the cleverness of the APE acronym to keep the retail investors on board.
But at the end of the day, it was just dilution.
A massive dilution event. The stock is down 98% since that move. It's hard to overstate the controversy and financial damage that caused.
And finally, less than a year ago, they tried a co-branded credit card.
Yeah, banking on the idea that customers would use it for everyday purchases, swiping that plastic for groceries and gas, generating interchange fees for AMC.
And that didn't work either.
Another failure to diversify outside of their expertise. The stock is trading 96% lower now than when that card launched. The takeaway is just so clear.
All these big pivots.
Crypto, gold, banking, they all failed because they deviated from the company's fundamental strength, the in-theater experience.
That context is so crucial, because when we look at the few brilliant moves AMC did get right, they were all focused on improving the core product. We're talking about reserve seating, the MacGuffin bars, which, if you haven't been, are these fantastic full-service bars inside the theaters, and critically, the AMC Stubs A-List subscription program.
Exactly. Those successes were all rooted inside the building. They optimized the high-margin experience inside the theater, and that finally brings us back to the popcorn pass.
Which, despite its simplicity, is a pure play on maximizing that in-theater margin.
Yeah.
So here's where it gets really interesting. Let's look at the mechanics.
Okay, so the deal is very specific and it's highly targeted. It is only available to members of their AMC Stubs loyalty program.
So not just for anyone.
No. You pay a $29.99 one-time fee, and that gets you a pass for 50% off a large popcorn bucket every single day through the end of 2026.
So that's what, a 13-month pass?
About that, yeah.
Now, if you look at the history of food promotions, your gut instinct should be telling you this is a terrible, brand-eroding idea. You're discounting your single most profitable item.
It absolutely sounds like a financial disaster based on, decades of industry history.
Yeah.
We've seen this playbook fail spectacularly.
Like Red Lobster.
The classic example, right? Red Lobster's deep commitment to endless shrimp promotions ultimately drove them toward bankruptcy. Or even look at amusement park operators who realize that these seasonal dining plans just attract the wrong crowd and diminish the brand.
So I have to be the skeptic here. If unlimited shrimp taught us anything, it's that deep discounts can really wreck a business. Why should we believe this popcorn pass is any different?
That is the critical question, and the answer lies in the strategic placement of the concession stand itself.
What do you mean?
This pass is fundamentally different because there is a crucial gatekeeper in place. You still must buy a movie ticket. You can't just walk in off the street and claim your half-price popcorn.
You have to pay the entrance fee to get to the high-margin area.
Exactly. Our source highlights that this shifts the function from being a pure discount, which is destructive, to being a powerful incentive that directly ramps up the frequency of ticket purchases. The moment you make a customer feel they have to leverage their sunk cost, you win.
That makes perfect sense. They're buying another reason to come back. So let's get into the hard numbers. Why can AMC actually afford to sell popcorn at half price?
Okay, so this is the deep dive into concession economics, and it requires us to understand the cold, hard business model of a movie theater.
Right.
When you buy a ticket, the theater sends roughly half of that money right back to the studios. They cover their operating costs, salaries, rent, but the margin on the ticket itself is tight.
The ticket is just to get you in the door.
Precisely. The ticket gets them inside, but the concessions pay the bills and generate the profit. Movie theaters keep all of the high-margin concession revenue. And here is the critical data point that changes the entire calculation.
Okay.
AMC's gross margin on its concessions through the first 9 months of this year was an astounding 80%.
80%. Seriously. An 80 gross margin.
80%. That is immense.
So if they cut the price of a large bucket of popcorn in half, they're still operating at a 40% gross margin on it.
You've done the math perfectly. Even at half off, they are making a tremendous amount of money on that sale, far more than they make on the actual movie ticket itself.
They're giving up some margin on one item to guarantee volume across the whole operation.
Exactly. And that leads directly into what our sources call the upsell engine. This is where the behavioral psychology meets the economic reality.
Okay, so what is that?
Well, the commitment to a large, salty, discounted product, the popcorn, is a psychological trigger. It's designed to drive massive full-priced beverage sales.
Of course.
Think about it. You commit to that 50% off bucket. You are going to eat a lot of salty, dry food. You are now almost compelled to buy a full-price drink to finish it.
And sodas and water are massive margin items themselves.
Pure profit drivers. The boost in salty popcorn sales is designed specifically to force the customer into the high-margin beverage lane. This strategy minimizes the impact of the discount because the profit from the full-price drink instantly mitigates and often completely outweighs the revenue they lost on the popcorn.
So the popcorn pass is essentially a loss leader for a high-margin beverage subscription. That's phenomenal. But let's zoom out. How does this pass stack up against their existing loyalty programs?
This is the strategic stacking effect, which is key to long-term profitability and reducing churn.
Right. They already have the A-list program.
Yes, which is a monthly subscription for up to 4 screenings a week. The Popcorn Pass, which is a 13-month annual commitment, stacks perfectly on top of that.
So how does the pass make the A-list subscription more sticky?
It's all about the sunk cost fallacy and the principle of commitment. When you pay that $29.99 fee up front, you have committed to a year of cheap popcorn. You are now highly incentivized to keep your monthly A-list subscription active so you can continually access that benefit you already paid for.
So the value of A-list goes up because it unlocks the savings you've already bought.
Exactly. And it also incentivizes the infrequent moviegoer to join A-list just to maximize the value of their popcorn investment.
So it brings new people into the ecosystem.
It does. Plus, there's the sharing factor. A large popcorn bucket is, it's fundamentally a social product.
Made for sharing.
Right. Patrons who buy the pass are going to invite others to the movies, eager to show off their 50% off benefit. They become like micro-marketers for the brand.
And those friends might then sign up themselves.
Exactly. They get the discounted experience, see the nice reserved seating, maybe try the MacGuffin bar, and they might convert into new members down the line. It's a scalable marketing tool where the customer is paying AMC to market to their friends.
That potential for scalability really is what separates this from just a smart tactic to a true business transformation. Analysts see AMC revenue growing in the high single digits next year, but our sources are suggesting this could push them even further.
Yeah, that something as simple and behaviorally sound as this popcorn pass could deliver annual double-digit revenue growth for the first time in years.
And that'll come from a simple popcorn discount.
It comes from the increase in visit frequency and the guaranteed upsell. They are willing to sacrifice 40 points of margin on popcorn to increase the volume of 80-point margin concession sales and drive consistency in their A-list subscription base. It is a highly specialized, targeted, and, frankly, powerful strategy.
It's just remarkable how they've gone from these high-profile, bizarre business ideas, crypto, gold mining, to finding a path to success by just returning to first principles.
And leveraging that astronomical 80% concession margin.
This is unequivocally a sophisticated business pivot.
It really is. It's sound strategy that acknowledges the reality of their business model.
Yeah.
And while, outsiders and late-night talk shows might poke fun at the idea of a $30 popcorn pass saving a multi-billion-dollar company,
Sure.
The economic and behavioral math is undeniable. By focusing on what they do best, this move should ultimately leave AMC and its shareholders celebrating a return to profitability and stable growth by 2026.
That's a powerful conclusion. And for you, our listener, the takeaway here is deeply relevant for any business that sells high-margin products. We just watched how behavioral economics turned a seemingly desperate 50% discount into a powerful, scalable revenue driver.
And not by lowering prices across the board, but by using a small, upfront annual fee on a specific product to unlock guaranteed frequency and upsell in their core business.
Which raises a really important question for any business seeking consistent growth.
Yeah, how could you strategically introduce a small, paid commitment mechanism on your highest margin product to drive increased frequency and consumption of your core, lower margin product?
This isn't just about discounts.
No, it's about forcing commitment and guaranteeing volume across your entire revenue stack.
That's certainly something to mull over the next time you're buying a ticket. The subtle power of the simple subscription model is often far greater than any flashy diversification scheme.